We have farmers that have been doing profit monitors consistently, some of them back over the last 20 years, and they have a great range of information on their farm, and it can be all put on one report, so they can actually see the story with the year kind of listed alongside it, and they can kind of relate all that back. And that history of the farm, that trend in figures year on year, is one of the key advantages that most people that do it every year find, is that, just looking back over that, it gives them a sense of satisfaction that, they're going in the right direction.
Hello and welcome to the Beef Edge, the Teagasc Beef Podcast, for your latest news, information and advice for Irish beef farmers. I'm Ciarán Lynch, and on this week's joint podcast episode with Ciarán Lynch, host of Ovicast, the Teagasc Sheep Podcast, to discuss financial management tips on drystock farms with Teagasc financial specialist Kevin Connolly. Kevin, you're very welcome. January is a good month to review 2023 financial performance before we start focusing and putting a plan in place for 2024.
It's a good starting point to look back on the year just gone, just to get a few feelers for what went right and what went wrong, and when everything is still fresh in your head as regards prices and weather and everything else, it's a very useful thing.
I suppose, can you start maybe with going through what you see as the main advantages for a farmer who completes a profit monitor?
Well, the main advantage, Catherine, I suppose, is that the profit monitor is very useful in actually pulling together all the financial information for the farm for the last completed production year, but then combining that with some of the main physical or technical measures to produce a kind of a more rounded picture of the year. So it stacks the financial and the technical, the physical side by side. Now, most farms already have all this information, but it's quite scattered. It's, in a number of different forms, invoices, checkbooks, marked and factory sheets. It's all there, but it's the profit monitor gives a format to actually pull that together. Now, the tax accounts that everybody has to do, that puts some kind of a structure on the financial information, but they generally don't become available until much later in the year. And we're trying to encourage as many people as possible to try and look at the finances as early as possible after the year just finishes, and that gives them a bit of a steer as to what they potentially could be looking at changing in the coming year. And I suppose the other thing that the tax accounts doesn't necessarily give you is it doesn't have that link to the physical performance necessarily on the farm, and that's crucial in trying to gauge where the performance is and how the farm did. And the profit monitor creates that link. And I suppose the main advantage is that it's a service that we provide in Teagasc to all our clients that are interested in coming forward with the necessary information to get the job done.
And you mentioned it there, Kevin, it's often quite a daunting task for farmers where you start. What advice have you for listeners?
Well, look, Catherine, yeah, there's a bit of work in it, all right. But like as with most things, anything that you want to get a decent reward from requires a little bit of effort, and the profit monitor is no different there. The more you put into it in terms of the quality of the information and how much detail you put into the system, the more you're going to get back in terms of your understanding and the detail in the analysis. As I said earlier, Catherine, most of the information is already there. It's just a matter of putting a small bit of order around it. Like you have all your stock sales from the farm, they're there in, the marked factory sheets, and you can pull that together, or there might be potential to pull that digitally together if you deal with one particular mart or factory, and most of your sales go through that. But even if that's not an issue for you, if looking at computers or digital reports is not something that you're interested in pursuing, Teagasc advisors have plenty of experience in this area, and they'll give some guidance and help on how to actually pull that information together. So that's the sales side, and that's one component. The other side of it then is, the expenses associated with the farm. So the main ones like feed, fertilizer, vet, most of those are, you'd be dealing with kind of one main supplier for your feed, fertilizer, and one vet. So a printed electronic statement or printed or electronic statement requested from those suppliers at the end of the year, at this time of the year, ask them to give you a full list of everything that they supplied to you in 2023. That'll have everything that you need, or the vast majority of the information you need for those kind of key expenses. And then anything else outside of that, you should be able to trace it through your bank statement or your checkbook. So look, there are some electronic options to gather some of this through online banking or through some of the cash flow programs that are available there. And Teagasc has its own cash flow program in Microsoft Excel that we can distribute to clients if they want to record that information as they go during the year. But it's whatever you're having yourself as regards the way you choose to actually pull the information together.
Kevin, just like on that, you've covered most of the data that goes into, I suppose there's remote sources there for some of the production data like ACBF. Have you any tips, like the cost control planner is one way maybe keeping track of this throughout the year? If you're going to continue in this, is there any other tips you'd have for kind of pulling that data together?
Yeah, well, look, at the cost control planner is the most organized way of doing it, Ciarán. It was set up for that purpose. It has all the kind of categories and headings that you need. It doesn't require an awful lot of, competency on a computer. You don't have to be able to be an expert driver on a computer to be able to use it. But you obviously need to have a computer to run it. It's freely available to all clients as well, Ciarán. So we have no problem in giving that out to people to use, but you have to use it. It's not a mind reader, so you have to actually put the information in. You can put it in regularly, or you can put it in all in one block at the end of the year. Other options, I've seen all sorts of options over the years. We have sets of input sheets. You're back once you go away from the computer, you're back then usually looking at writing, or keeping a manual record. There is a kind of booklet that advisors developed themselves a number of years ago to be able to capture month by month the different costs and income categories for the farm for the year. Some of the accountants do very good kind of breakdown reports showing, for each individual transaction, where the money was spent. So some of the accountancy firms do provide that type of information, and getting your information into the accountant early is a useful thing to do, and maybe request that back, and it can be used for a profit monitor. Anybody that's participating in the National Farm Survey as well, we have our own National Farm Survey recorders that go out to a limited number of farms, and we get very detailed information on those farms, and that can be used to generate a profit monitor. So there's a number of different options. The ACBF, anybody that signed up to that, all the stock information in terms of numbers of stock that go through the farm in the year, all sales and purchases numbers, and sometimes even the euro amounts can be picked up off the ACBF system, provided you're signed up for the Herd Plus. So it's a very useful, and we tap into as many of those are available. We're not going to ask people to hunt after information that's already available there. We'll go after the easiest way of getting the information with the blessing of an individual farmer to pull it together to actually run the analysis.
Kevin, there might be a bit of work on pulling it together, but it's probably a very useful process as well. It puts a lot of the costs and the inputs and outputs on the farm into perspective as well.
It does, yeah, and that perspective is useful, Ciarán. As I said, it's the profit monitor produces a good number of reports, and some of them are quite detailed. But we've actually incorporated quite a bit of a few graphs into the system now as well. But what it tries to do when it's given the information back is it tries, as I said earlier, to kind of relate the financial with the physical. Some of the key kind of physical or technical components. So the total value of the farm output and the farm expenses would be related back to the land area farmed, the stocking rate on the farm, and the total output, the total physical output in terms of kilos of saleable cattle and sheep sold off the farm. And it tries to relate those two things together, the physical and the financial, and then looks at the individual components of the cost associated with generating those sales and that output for the farm. And really, that's whether the advisor and the farmer kind of work together and kind of relate, right, I know I generated this amount of sales. What was the given level of cost associated with that? And can I relate that back to what I'm stocked at on the farm, or what actually happened on the farm during the year in terms of weather, or something maybe that didn't go right in terms of system, or a health issue on the farm? And every individual farm is different. And, with the advisor and the farmer working together and teasing through the figures, they can relate all the full story of the farm will be there for them for the last year. And that's a very, very useful thing to do.
And just like in terms of that detail, like many of the farms have mixed enterprises, maybe sheep and beef on it, or even different beef enterprises. You can get that breakdown of the different enterprises, how they performed as well.
You can, Ciarán, and that's something that's maybe a little bit unique to the profit monitor, is that, where you have a mixed enterprise farm, as you say, cattle and sheep, quite common as a mixed set of enterprises on a farm. The system will work with the figures and split them up between the enterprise to give you an individual assessment of each of those enterprises individually, as well as the whole farm set of figures for the farming system. So, breaking that down in terms of what the cattle enterprise contributed to the overall farm and what the companion sheep enterprise that was on that farm as well contributed, gives you an indication as to which enterprise is doing versus the other, and that will, I suppose, kind of tailor the decisions maybe that might be made as regards maybe increasing one, scaling back the other, or future decisions on those enterprises on the farm.
Yeah, it's important you have the overall farm, but you have each individual enterprise. So when you're making your decisions, it's giving you a good footing. Look, we're talking about making decisions. Probably one of the useful things it does, it can help you work towards a target for that farm. Like, so in terms of either profit or that, whether it be gross margin or net margin, is there any way they can benchmark themselves again a target or again other farmers?
The profit monitor, I suppose, is known as a benchmarking tool or a benchmarking system. So we do try and encourage comparison of the farm figures against some benchmark, some actual set of target figures or figures that you're trying to pick up the differences against. And the main thing most farmers, and we have a good few farmers that are doing profit monitor consistently over the years, and the first thing that most farmers do when they get their analysis back from their advisor, when they're sitting down to talk through it with their advisor, the first thing they're comparing against is, well, how did they do this year versus the last year? And being able to pick up the difference on their own farm between the 2 years and trying to relate that back and having that discussion with the advisor and thinking back, right, prices went this way, input prices went the other way, and the stocking rate, I had to change that during the year, or I had a difficult summer in terms of grazing and so on. That's all can be related, but to pick up why 1 year is better or worse than the previous year, and that's, I suppose, the purest benchmark you're going to have, because it's everything else on the farm, everything else behind the scenes is consistent. It's the same farmer, usually the same land base. So you're down then to looking at components of the actual performance that vary during the year, and why did that happen? As I said, due to prices, obviously a big variation, and weather and health factors and so on. All those things kind of will be discussed. Outside of that, Ciarán, where you go to benchmark, then the advisor will be able to work with the farmer and set a target figures for each of the different components in terms of the output and the costs, and be able to kind of set what a farm similar to your farm is your farming system, what a specific target would be, or a good target would be. But the one thing I would say is that I wouldn't like listeners to get the view that this is just kind of an exercise in beating somebody up on as regards their cost. The whole purpose of benchmarking is not to be able to say, this cost is too high, you're spending far too much on that. It's relating kind of what was spent back to what production you got from it, because we know from looking at profit monitors over the years, there's all sorts of different ways to generate profit, and some people have reasonably high cost based on their farm, but they're meeting it on the other side with a good high output, and there's nothing wrong with that. But the problem is where you have an inconsistency there in terms of the output versus what the farm could be doing in terms of a cost base to produce that, and they're not achieving that for some reason. And that's the area that the advisor and the farmer can work together with, using the information from the profit monitor, kind of to put a plan in place, maybe to do something different in the coming year, and see, does that make a difference in terms of bottom line profits.
I think that's a very important point, and every farming system has to be taken in context of what they're working with. Look, we just mentioned profit. I suppose the two measures that are shown in the profit monitor output is gross margin and net profit. Maybe just for someone to listen, you just explain the difference between those and the limitations of interpreting it.
Look, there's some kind of maybe slightly complex terminology that's thrown out around discussion of the finances, but really what we're getting at with some of these measures is really just to try and get at a figure that we can easily kind of compare and easily look at and pull apart to see, well, what's actually affecting that figure. So if you look at gross margin, the reason we kind of use gross margin a lot is that the way gross margin is calculated on a farm, it takes the value of the sales, or the value of the sales, which is the biggest component of output on the farm, and deducts from those sales what we call the variable costs, which are the main costs that would be linked to the level of the output on the farm. So what level of sales you produced and the value of that sales is quite closely related to some of the key variable costs, such as, and I mentioned most of them already, the likes of your purchase feed, your fertilizer, your contractor, your vet. They're classed as the variable costs, which tend to rise and fall versus the output. So when we take the total value of your variable costs from the total value of the output on the farm, that's your what's defined as your gross margin. And it's a very kind of useful, I suppose, proxy or indicator of efficiency of production on the farm. But after that, there's still a whole tranche of costs that haven't even been looked at. And we define that batch of costs as the fixed costs. And they're, I suppose, the only difference between those costs and the variable costs that I mentioned previously is those fixed costs tend to not vary as much in intensity on the farm. They tend to be related to other things, other decisions that are made on the farm, decisions to invest in machinery or buildings, or borrow money to buy land or invest in other things on the farm. A lot of those, some of the main fixed costs are tied up in those type of categories. Now, they still have to be covered. There's still a cost on the system that the farm has to cover. So when they're deducted off your gross margin, that leaves you then your net profit figure at the end. And Ciarán, we tend to kind of keep direct payments and that kind of out of that calculation until the very end. Once you end up with your net profit from farm operating activities, then we add the direct payments on at that stage to give you your final net profit figure. And the main reason we do that is it just makes it more transparent. If the direct payments are kind of kept to the end, what the actual farming activity is doing on its own right.
You mentioned there, Kevin, the importance of farmers that have completed a profit monitor for a number of consecutive years. What feedback have you got from farmers that have completed one annually for the last number of years?
I suppose that the main feedback, Catherine, is that they find it very, very useful in being able to pick up trends on their farm over the years. Like, as we know, no 2 years are the same, and there's an awful lot of things that vary when you're in the business of farming, and some of which can be slightly within your control, and some of which are outside of your control. But when we have farmers that have been doing profit monitors consistently, some of them back over the last 20 years, and they have a great range of information on their farm and it can be all put on one report, so they can actually see the story with the year kind of listed alongside it, and they can kind of relate all that back. And that history of the farm, in terms of the profit monitor analysis going back over that length, it takes in a number of the different components of the story, some of which were, as I said, dictated by the way the direction that the farm went during that period. If a decision was made to change enterprise, or either become more intensive or less intensive, or bring in more land into the system, or do something different as regards the way they actually farmed, that can be picked up. That story can be picked up within those sets of figures on the profit monitor, and that trend in figures year on year is one of the key advantages that most people that do it every year find, is that just looking back over that, it gives them a sense of satisfaction that they're going in the right direction, or it also helps them kind of understand how their farm business operates from a financial point of view, and that they can actually see the story and relate it back to all the things that they knew happened. I mean, people look back on previous years of data and will say, yeah, that was the year of the bad summer and difficult grazing, and that was the year that, I was able to keep stock out an awful lot longer, and look at the difference that made in terms of getting extra grass into stock and so on, and the difference that made to my costs, and point to differences in stocking rate and various things that they did on the farm. And it's a very, very useful thing to have that information to hand.
Most definitely. We've seen over the years, as you've mentioned, volatile market conditions or weather can really impact on the financial performance in a particular year. Many listeners might say, I know my bill for meal, fertiliser or veterinary, what it was. How does that impact on improving their financial performance going forward?
Yeah, well, look at knowing the meal bill and vet bill and so on is a great start, anyway, Catherine, because I suppose some people wouldn't, be able to pull that figure out without using something like a profit monitor, or else they're looking at their tax accounts. But really, what we try to do with the profit monitor type analysis is relate that level of spending back to the actual sales and the output of the farm. As I mentioned earlier, there's nothing wrong with spending money on a farm, provided you get a decent level of output to be able to carry it. Or you make that decision on the basis of the way the system is set up. One of the things that obviously we push big time in Teagasc is trying to produce and maximize the use of grazed grass within the system, to try and use a low cost feed to be able to maximize the output you get. That's not to say that purchase concentrates are not a key component of a good few of the systems, particularly the finishing systems that we have. But provided those, you're getting a return from that, and that will become pretty visible within an end of year profit monitor analysis, whether that spend in some of those costs is justified or not in terms of the output.
Most definitely, as farmers start to gather the information, particularly for veterinary bill, for example, they can see whether some of the bill was made up of a vaccination programme versus a treatment programme, etc.
Yeah, and we've done a bit more work in the profit monitor over the last couple of years in breaking down some of those costs a little bit more, giving a little bit more information back to the farmer, because that was one of the, I suppose, feedback that we were getting back from farmers themselves. We always obviously had a cost category in the profit monitor, vet. And just as you described there, Catherine, farmers were saying, well, that vet is made up of an awful lot of individual costs in there that we wouldn't mind having a look at to see, are we getting much return for the way we're actually spending money on veterinary. So the likes of vaccinations, picking up vaccinations versus kind of general dosing and general parasite control is one aspect that we split out separately to allow people, or give people the option of looking in a bit more detail at some of those costs.
Kevin, you've covered a lot about the profit monitor and various aspects of how it can influence your business. Maybe if you had 3 comments or piece of advice for listeners to undertake for 2024, what would they be? I
suppose the first thing I'd start with, Ciarán, would be maybe make a bit better use of your accountant. That might be a surprising one maybe to start with, but a lot of people use their accountant just purely for tax return reasons. But these people have a very good expertise in the whole area of setting up a business properly, looking at maybe profitability of the business, and also obviously looking at tax savings and so on. But one of the things that we would be encouraging, particularly on the farm management side, is even from the point of view of succession and making use of your accountant to give you a bit more than just kind of putting a figure in front of you what your tax bill is for the year. That'd be the first thing I would encourage people to do, to make use of those people for more than just generating a figure for tax for you. The second one, I think, back to kind of what the topic of this particular podcast is don't be afraid to start looking at the finances yourself. They're not that scary when you get into it, and your advisor will assist you in being able to pull together, very useful information that you can actually use yourself as a way of helping you make decisions on the farm. So, just using your current account balance, your tax accounts to give you that feel, it'll get you so far. But the likes of a profit monitor really allows you to take control by getting a good handle on the figures yourself and getting yourself more comfortable with how financially the farm works. And just to pick up on that, my last one would be, if you could make this year and using the profit monitor to look at, say, the last completed year, which is 2023, if you've never done one before, if you could make that 2023 analysis the first year of many that you're going to look at using the profit monitor, as I said earlier, every year is different, but the general trends tend to follow kind of reasonable straight lines. And if you can kind of work that out in your head by looking at sets of figures on your farm using a profit monitor over a number of years, you'll be giving yourself great information to help you make some of the significant enough decisions that people have to make around their farms over the period of a year or two.
Kevin, that's a great bit of advice. Really appreciate you coming on with us today.
That's all, Ciarán. Thanks very much. And Catherine, thank you.
That's all for this week's episode, and I'll include a link in the podcast text to bring you to the Teagasc website if you're interested in completing a profit monitor for your farm. My thanks to Kevin and Ciarán for joining me on the show. You can catch up on all other shows and interviews from the Beef Edge podcast on the Teagasc website at teagasc.ie, or you can listen on Apple and Google Podcasts as well as Spotify. Don't forget to rate, review and subscribe so you never miss a show. For all other updates from our beef programme, keep an eye on our Twitter and Facebook pages. Until next time, I'm Ciarán Lynch and thanks for listening.